Hi everyone, and welcome back to the channel. In my last video, I told you that the similarities between our current era and the 1970s are becoming eerie. We talked about the lost decade for stocks, the breakout of gold, and the print mentality of the elites. But I left you with a cliffhanger. I mentioned that, while the charts are screaming 1972, there is a human element behind this, a ghost in the machine that most retail investors are completely ignoring. Today, we need to talk about the man who currently holds the keys to the global economy, Jerome Powell. Powell's term as Fed chair is coming to an end in May of 2026. And as we sit here in the early months of this year, the speculation about who comes next isn't just a matter of who gets the job. It's a matter of whether the Federal Reserve as we know it, an independent, inflation-fighting institution, is about to die. We are looking at the potential return of the puppet master era. And if history is our guide, this is the final ingredient needed for gold to go from a melt-up to an absolute explosion. To understand why markets are sweating right now, you need to know one name: Arthur Burns. In the early 1970s, Burns was the chair of the Federal Reserve. He was a brilliant man, but he had a fatal weakness: his relationship with President Richard Nixon. No, not that kind of relationship. For decades, historians suspected it, but the release of the Nixon tapes confirmed it. Nixon bullied, pressured, and manipulated Burns into keeping interest rates low to ensure the economy stayed hot for the 1972 election. Nixon famously told him, "I don't want to be the first president to lose an election because of a recession." So, Arthur Burns caved. He kept the money printer glowing red when he should have been slamming on the brakes. He chose political survival over the purchasing power of the American people. The result: the 1970s Great Inflation. A decade where the dollar was hollowed out, the middle class was decimated, and gold rose by nearly 2,000%. Now look at the headlines today. Look at the candidates Trump is vetting to replace Powell. The markets are asking one terrifying question: is the next Fed chair going to be a new Arthur Burns? As of early 2026, the shortlist has narrowed down to what Wall Street is calling the battle of the two Kevins. On one side, we have Kevin Warsh. Warsh is a former Fed governor. He's pro-crypto, he's market savvy, and he has often criticized the Fed for being too slow to react. On paper, he is the independence candidate. But here's the rub: Trump has publicly stated he wants a Fed chair who listens to him. The markets are wondering if Warsh is willing to play the role of the loyalist in exchange for the crown, or at least pretend to be the loyalist until Trump hands him the keys. On the other side, we have Kevin Hassett. Hassett is the ultimate insider. He's an architect of the administration's economic policy. He argues that AI and deregulation mean we can have lower rates without inflation. The fear isn't that these men are incompetent. It's that they are reachable. If the market senses that the Fed has become a branch of the White House, their inflation expectations will break. If the Fed becomes a tool to fund the deficit and keep the stock market high at all costs, the dollar loses whatever trust it still has. And remember what I said in my last video: value is determined by society. If society stops believing the Fed is independent, they will stop believing in the dollar. Just take a look at the US 30-year. The bond market is the smartest room in the house. And right now, bondholders are screaming. Despite the Fed being in a cutting cycle, the 30-year yield is refusing to go down. Why? Because lenders are demanding a political risk premium. They are saying, if the next Fed chair is a puppet, I want to be paid more to hold this paper. You might be thinking, but the stock market is still near all-time highs. Surely that means everything is fine. Not necessarily. Remember the distribution pattern I showed in the Dow to gold ratio? In late 1972, the Dow Jones was also hitting new highs in dollar terms. People were celebrating. But in gold terms, the market had already peaked years earlier. You were getting richer in a currency that was losing its value faster than your stocks were growing. Today, we see the same thing. If Trump appoints a Burns-style loyalist, we will see ultimate chaos. This will be a tariffs 2.0 scenario. Probably even worse. I've said it before, the elites will not allow a nominal crash. Your 401k will likely stay high in dollar terms. But when you go to the grocery store, or when you try to buy an ounce of gold, you will realize the gains were an illusion. They were just inflated by a currency that is starting to lose its faith with society. This might be a good point to remember why we call paper money fiat currency. We are currently in the late 1972 phase of the roadmap. Back then, the pivot to a political Fed was the final trigger for a 2-year brutal bear market in real terms. And I would pay very close attention in the coming months, anytime there is an announcement on who could become the new Fed chair, how the S&P 500, and in return, how gold behaves. Right now, everyone is thinking about Venezuela or Iran or Greenland or, as per usual, new tariffs. But in my opinion, the real story for markets this year will be who is becoming the new Fed chair. Surprisingly, even though Trump appointed him back in 2018, Jerome Powell has tried to be the anti-Burns. He's tried to maintain the dignity of the institution, but his time is up. Whether it's Warsh, Hassett, or a dark horse candidate, the next Fed chair will face a choice: fight the inflation that is still around, or keep the president happy. What do you think? Is the Fed's independence already a myth? Is the two Kevins debate just a distraction from the fact that the printer is already out of control? Let me know in the comments. I read all of them and would love to build a debate. If you found this deep dive into the 1970s playbook helpful, leave a like and subscribe. We are going to be tracking this transition very closely as May 2026 approaches. Thanks for watching, and I'll see you in the next one.